Good morning everyone. Ni siku nyingine tena. Orbit Securities tupo mahali hapa X space, zamani Twitter space, kwa ajili ya kuongea mambo kadha wa kadha kuhusu uwekezaji. First and foremost, naitwa Ami Julian, na nipo hapa Orbit Securities kitengo cha research. Baadaye atajiunga Mr. Protas Rutabingwa ambaye ndio mkuu wa research hapa Orbit Securities. Orbit Securities is a stock brokerage firm ambapo tuna dili na mambo ya kununua na kuuza hisa, lakini vile vile upande wa hati fungani vile vile tuna assist watu kuweza kununua na kuuza hati fungani. Furthermore, pia tunahusika na kutoa ushauri at a corporate level but also at a retail level kuhusu uwekezaji. Unataka ku raise capital, unataka kuwekeza uwekezaji wenye tija, informed investment. That is what we do. So as we proceed, tukiwa tunawasubiri wasikilizaji wetu, tutaendelea kidogo na nini kinaendelea sokoni, but most likely ningependa kwanza nipate confirmation kwamba mnanisikia vizuri kabisa, kwa sababu over time tumekuwa tukipata challenges za watu kuweza kutusikia vizuri sometimes. Kwa it will be great to know that mnatusikia vizuri on your ends. Just let us know.
Mimi ninakusikia vizuri Ami.
Asante sana Francis. Naona Mr. Protas umesha join in. Karibu sana. So tutaanza na what has been happening katika soko letu, especially kwa hiki kipindi cha wiki hii toka tulivyoachana last week, ambapo we had a very interesting session with our speaker Mr. Abbas. A lot has happened ndani ya wiki moja. Maanake katika financial markets wiki ni refu sana, anything could happen. Na kweli kwa upande wa Tanzania mengi yametokea, lakini first and foremost ningependa kuanza na mnada wa jana wa hati fungani, alafu baadaye tutaenda kwenye upande wa Tanga Cement. Sasa kuhusu mnada, jana kulikuwa kuna mnada wa bondi ya miaka 20. Na kumbuka katika kalenda ya mwaka huu hii minada ya bondi za miaka 20 na miaka 25 ziko 3 tu. Sawa. Kwa hiyo huu ulikuwa ni mnada wa pili wa bondi ya miaka 20. What does that say? Ni kwamba demand inaongezeka, lakini ya hizi bondi. Lakini kwa jana it was very peculiar, kwa sababu tuliona kwamba mnada serikali ilikuwa inahitaji bilioni 216, lakini soko likaleta mzigo uliofikia bilioni 117.56. yani soko halikuwa na demand kubwa sana. Umeona, ukicheki kuna kipimo kimoja kinaitwa bid to cover ratio, kilikuwa around 0.54, ikionyesha kabisa kwamba the demand was weak. Lakini tukienda upande wa oversubscription na undersubscription, manake hapa mnada automatically ulikuwa undersubscribed, na kweli successful bids zikaishia kwa bilioni 107.55. Nini manake? Manake kwamba serikali ilishindwa kupata kile kiasi ilichohitaji katika mnada wa moja ya hati fungani ambazo zimekuwa very popular, zinapendwa na watu. Na the most important part ambayo it was very interesting ni price ambayo serikali ilikubali kukopeshwa katika huu mnada, ambapo tunaona serikali iliweza kukubali pricing yield ikafika 13.5%, 13.5% in yield. Lakini minimum successful price actually ili hover at around 86.23. What does that say? It says that bond prices are falling, yields are going up. Sasa nini manake? Je, ni mispricing upande wa serikali? Kwa sababu tunaona Kenya yields zipo around 18%, zipo around 17%, so is Uganda. Lakini upande wa Tanzania tunaona coupon bado ziko huko kwenye 12.56. What does that say? Mr. Fortius, karibu sana kwa uchambuzi wako. Team, I've seen that you have already joined in our session. Great to see you, sir. We are just going through some highlights and then we can start our session.
Yes, okay, I'm here.
All right, great. Yes, Mr. Fortius.
Asante sana. Nafikiri kwanza karibuni sana wote kwenye session ya leo. Kwa walioko Dar es Salaam, nafikiri tunaendelea kufurahia hii mvua ambayo bado inanyesha kwa utaratibu. Mr. Tim, welcome to our session. This is the first part. We are starting with the wrap up of the market and maybe with a little bit of your knowledge of Swahili, you will hear of what we are covering. So Ami, nakushukuru sana kwa hiyo taarifa kuhusiana na mnada wa jana, lakini nafikiri ni hali ambayo kidogo inaleta maswali mengi. Yield zimeongezeka, lakini participation haikuwa kama ambavyo serikali ilikuwa imetarajia, yani kwa kile kiwango ambacho walikuwa wanataka kuraise. Kwa sasa hii kidogo kwa upande wa wawekezaji naweza nikasema ni double edged sword, kwa sababu kwa wale ambao ndo wanaanza kuwekeza, ambao ndo wamenunua bondi kwa mara ya kwanza siku kama jana, ni kwamba wamezipata kwa bei nzuri, kwa hiyo yield yao ni nzuri, ni kubwa. Lakini sasa kwa sababu yield zinazidi kupanda, kwa wale ambao tayari wanazo zile za zamani kimsingi wanaanza kupata ile capital loss, kwa sababu yield zinapopanda ile bond portfolio ulionayo inakuwa inashuka. Lakini effect yake nyingine vile vile ni kwamba hata kwenye corporate bonds gharama zinaongezeka, kwa sababu most of hizi corporate bonds huwa zinakuwa priced off the treasury securities. Kwa sasa inaongeza funding cost kwa corporates ambao wanataka kuja sokoni kuraise hizi corporate bonds. Lakini effect yake nyingine inaweza ikaja kwenye stock market, kwenye shares. Kwa kwamba soko letu bado haliko responsive haraka sana na kinachotokea kwenye
Mr. Fortius, I think you're broken. I can't hear you at the moment. Now nakusikia.
Nilikuwa naongelea kuhusu effect yake sasa hizo yield kuongezeka kwenye stock market, kwamba kwa sababu yield zinaongezeka, ile discount factor ya kuvalue zile cash flow za shares inakuwa imeongezeka. Kwa kuna possibility kwamba hiyo impact ya kwenye treasury securities market kama ikiendelea, zile yield kuongezeka, inaweza ikasababisha sasa zile bei za kwenye market labda zikashuka au kawa na some sort of volatility. Sasa kwenye chumi nyingine ambazo zimekaa vizuri, kuongezeka kwa yield kunaweza kuwa na impact ya labda exchange rate appreciation, kwamba labda yield zinaweza zikafika kiwango ambacho inavutia foreign direct au foreign currency foreign capital flows kuingia ndani kuja kutafuta hii yield ambayo imeongezeka. Lakini kwa soko letu la Tanzania, kwa sababu bado kuna protection ya foreigners kuwekeza kwenye treasury securities, hiyo impact tunaweza tusifaidi. Lakini kimsingi ni trend ambayo inabidi tuiangalie vizuri, kwa sababu kitu kingine inawezekana labda kuna market na inflation expectation, kwamba kuna higher inflation expectations. Kwa hiyo kabla hawajawekeza kwenye long term instruments wanataka adequate compensation. Kwa hiyo inaweza ikawa inafuatia kwamba labda inflation
Mr. Fortius, you have gone AWOL again.
hapo sijajua tatizo nini.
Okay, you're back.
Basi nafikiri kumbe simu ikiingia kwenye sleeping mode nakuwa napotea. Okay. Kwa nafikiri unaweza ukaendelea. Hizo ndo comments zangu chache kwenye hii performance tunayoiona kwenye treasury market.
Okay. On another note, tuliona Tanga Cement. We had an update from Tanga Cement, and I think over the past 2 years, we have observed that there's been speculations or there's been sentiment of a potential acquisition for Tanga Cement, as this particular company actually has been having some financial turmoil. Uh, and over time, it has been a roller coaster because the government has been coming in and putting in some directions. But at the start of this particular week, we observed that there was an offer which was publicly reported, where Scanscam, hawa ni kampuni ambao sasa iko interested kuinunua Tanga Cement, proposed to buy around 43 million shares, 43.5 million shares of Tanga Cement, which is roughly equivalent to 68.3% of all the issued shares. This offer is actually valid from October 31st to November 21st of 2023. And for Tanga Cement shareholders, they have actually an option to sell their shares based on these particular conditions during this period. Just for a background, Scanscam is a subsidiary of Heidelberg company, which is a German company, while Scanscam is actually incorporated in Norway. Heidelberg has been highly involved with Trigger Cement here in this country, and they have had relationships dating back to 1966. So for the indicative price for the particular acquisition is around Tanzanian shilling 2,442, but it's subject to change due to exchange rate fluctuations, but also the final price might be adjusted according to debt, working capital, and other expenses, and particular other modifications which might just rise up as further valuations are done between parties. So that being said, this has been quite an interesting case. I will start, I think, with Tim. Tim, what's your opinion about this particular update regarding Tanga Cement on your end?
Hi. Look, I saw the notice on Monday, and people might have seen me tweet about it, or if you're a member of the Telegram channel that I run for my African Lions Fund, I also talked about it there. It's a little bit confusing, but if you read the fine print, it's as expected that Scanscam, whose parent company is Heidelberg, which also owns 69% of Trigger Cement, they are now buying the block of Tanga Cement shares that AfriSam has held for many years. And the offer that was published is only relevant to that block. So even though it's addressed to all Tanga shareholders, the only eligible shareholder to accept this particular offer is AfriSam, because it's the only one that can satisfy the condition of selling that larger block. So I did check this with the company, and they confirmed that, yes, once this deal is done and AfriSam tenders its shares, then they will make the adjustments and they will know the exact per share value. You mentioned there are some closing cost adjustments and so on. So once that final figure is known, then the CMSA directed them to make the offer to the rest of the Tanga shareholders, the minorities, and they will be offered whatever the final amount ends up being. So you can expect to see another notice similar to the one that came out on Monday, probably sometime in December or early next year. That's my read of the situation. And, you know, it's been a long-running saga, as you said, but I think it's positive for everyone in the end. You know, it's good for Tanzania to have more strong cement companies. And there is a lot of competition in the industry. I know there were, you know, arguments back and forward about potential competition effects of this deal. But if you look at what the Chinese company Huaxin is doing, they were the ones that bought the Ati River assets out of bankruptcy up in northern Tanzania. They're a very aggressive competitor also here in Dar es Salaam. And then, of course, Dangote in the south has a massive cement plant. So there's plenty of competition in the cement market. And it's good that Tanga will survive and that their debts will be paid off, and now it will be managed by Heidelberg, which I think is you know, going to see it do very well in future.
Yeah, according to I read, when do you expect this deal to go through? But also, what are the prospects for Tanga Cement moving forward? For instance, maybe shareholders could be interested and maybe expect changes, but how often? And in the nature of this kind of deals, how do you see the management? Do you see the management continuing, or do you see a change in management completely?
No, so from what I hear, I have some friends who do business with Tanga Cement, and they have reported that the employees of Tanga Cement, who were quite nervous throughout this whole process, they're now feeling much better about the situation. There was a delegation from Heidelberg that visited Tanga this week, and the same people that are working at Tanga will continue. The very top management will change, but middle level management, these people I think are going to be retained by the Heidelberg Group. But then the overall strategic direction and top management will now be set from the Heidelberg side. But basically, it will be continuing to operate the existing facilities. And I also hear that Heidelberg intends to add another kiln at Tanga Cement. So there's an expansion planned, which is good for the whole Tanga region and so on. As far as shareholders in Tanga, I mean, if you're a minority shareholder in Tanga, you have a choice to make. Do you take the money that Scansem offers you when this minority offer comes your way? Sometime in the next month or two is my prediction. Or do you just hang on to your Tanga shares and figure that Heidelberg is going to run the company well and it's going to start making profits and paying dividends again? I don't know. That's something that there will probably be a report that has to be published as part of the offer. Normally in these situations, when an offer is made to minority, there has to be an independent evaluation by an investment bank to advise the shareholders whether they should accept or reject the offer. So I would wait and read that before making up my mind. But it's a pretty attractive offer that Heidelberg or Scansem, their subsidiary, is going to make. You'll probably end up, getting somewhere between 22 and 2,400 shillings a share, which is pretty nice cash in hand. But no doubt some people will elect to keep their Tanga shares and grow with the company in future. But that's for the individual to decide once they have all the information to hand.
Great. Mr. Fortius, what's your comment as well?
Maybe not a comment, it's a small question to Tim. Now, if the same offer is extended to minority shareholders and the minority shareholders accept it, do you see the prospect of Tanga being delisted? Because that one will reduce the percentage of float which is required for the company to be listed.
Yeah, I don't know the answer to that question. It will depend on what the other 1/3 plus of shareholders decide to do. The shareholdings in Tanga Cement, when you look at it, they are fairly concentrated. The top 10 shareholders account for something like 90% plus of the shares. So if all of those shareholders accept, then yes, there is a situation where the minimum free float rules potentially get broken. And I don't know whether there's ever been an example like this at the DSE before. Probably not, right? So it remains to be seen what will happen. But yes, there's a definite risk that condition is triggered.
Okay, thank you for that response.
All right. I think now we will just proceed. We'll just proceed to the session and make it official. We are Orbit Securities, and we are here with Mr. Tim, who is an investor, but as well a fund manager. I think, Mr. Tim, it's about time now. I think you should introduce yourself. Maybe some listeners might actually not, maybe they're not familiar with you and what you do. So just come in again for some introduction. Karibu sana.
Asante sana. Okay. So my full name is Tim Staermose. That's a Danish name. I'm originally Danish, but I grew up in Australia. And back in 2018, I visited Tanzania and found the DSE was offering pretty good value. I worked in investment management and research in Asia for about 25 years prior to that. And I had never really considered investing in Africa. But I'm open-minded, and I'm just looking for investments anywhere in the world that makes sense. And at that time, a lot of developed markets were selling at ridiculously high valuations, and I found that here in Tanzania in particular, but also in some of the other African frontier markets, the situation was opposite. There were good businesses that were selling for not very much because the sentiment was bad at the time. So I came and I did some company visits with your colleagues at Orbit. I visited at that time, I think, Twiga Cement and CRDB, Vodacom, and various others. Also had some meetings with the CMSA, Bank of Tanzania, and so on. So I got comfortable with investing my own capital here in Tanzania. And my initial investment was actually in Twiga Cement, which back at that time was trading at only 2,000 shillings a share. I think today it's 4,240 or something like that. So it's well more than doubled, and it's also paid very handsome dividends along the way. So I've done nicely in that. But following on from my own investments here, I then started a fund for some of my other clients around Asia and Australia, and it's grown. And, we have over 130 different clients from all over the world that now invest in African Lions Fund. And that is the other investment vehicle that I have used to invest here in the Dar es Salaam Stock Exchange. We have significant stakes also in Twiga Cement, NMB Bank, TBL, as well as a small position in Tanga Cement, which is why I follow that situation quite closely. So I've been here living in Dar es Salaam, managing my portfolio since late 2020. So it's been about 3 years. And over that time, obviously, I've gotten to know the market quite well and follow the stocks that I hold and invest in quite closely. And from time to time, I share my knowledge in forums like this.
Mr. Tim, I think I'm having struggles to hear you. Mr. Fortes, are you with us as well?
I'm here,
Yes.
but I can't hear Mr. Fortius. He's speaking, but we can't hear him.
Yes. In fact, you get lost for the last 1 minute. I can hear Ahmed, and I'm online.
All right.
So so Tim, for the past year, we've observed
Yes.
that it has been quite a roller coaster, especially in African frontier markets. So what have been the key trends coming out of this particular market from Tanzania, Nairobi, Nigeria? What have you been observing across this particular sub-Saharan landscape in terms of financial markets?
Yes. So obviously, my initial focus was Tanzania, and I found the economy quite soft in 2018, 2019. The banking sector had some years of struggle, but it seemed at that time to be turning. And as it turns out, that's been correct. Tanzania has been doing very well compared to a lot of Africa frontier countries. Continuous economic growth even through COVID. And then, because of the strong agricultural sector and gold mining, tourism bounced back. So it's done quite well over the past few years relative to some of the other countries, even in the face of all these macroeconomic shocks from around the world. But every country is different. That's the thing. There's no such thing as a general frontier Africa performance. If you look at Kenya, it's the opposite. They've had a terrible time. The economy shrank during COVID, and then they don't have the same export engines that Tanzania has. Their taxes have gone through the roof, and the budget deficit is causing problems, and their fuel import bills have rocketed, and so on and so forth. And then, of course, they had political uncertainty on top of everything else. So if I look at Tanzania and Kenya, even though your close neighbors, your economies are at completely different stages in the cycle. Tanzania is now quite mature in the cycle. Banks have been growing credit at 30% plus for the last 2 or 3 years. Things aren't fantastic, but most people are doing better than they were. And the mood is optimistic, whereas in Kenya it's the polar opposite. And then you look at other places where I invest in West Africa, it's different cycles again. Ghana, for example, defaulted on its debts and had a terrible currency collapse, although they seem to be rebounding from that. Nigeria is different again. They've had a change of president there, and the new president seems to be making all sorts of changes that they hurt in the short term, but hopefully they will turn that place around in the long term. I'm actually going to Nigeria again for a visit here in a couple of weeks. But there's always somewhere that's doing well. And as investors here in the DSE, there's been a good couple of years, depending on your stock selection. But there are also other markets that Tanzanians can now invest in. And if you have an interest in following the other markets, it can be worthwhile. There are a lot of bargains available, in my opinion, now in Kenya, for example, because of the dire situation it finds itself in the economic cycle. But economies are cyclical. It will bounce back. No one knows when, but sometime in the next 5 years I'd be very surprised if the Kenyan market is not a lot higher than it is now. Tanzania, I think, will continue to do well. So there are lots of opportunities for investors. That's what I'm finding.
That's great. That's great. A key trend we're observing here in Tanzania is a strong appetite towards government securities, due to the fact that I think there's been a long time sentiment where people consider stocks quite risky. So that sentiment over time is just pushed people towards government securities, but also due to the fact that the coupons there are quite lucrative. We previously had around 16% in terms of a 25-year government bond, 15.96, and now it's around 12.56. What do you say about this particular appetite? Are we as retail investors, are we missing on opportunities towards stocks just by focusing on the government securities side?
I have always been heavily biased towards equity investments. I'm not someone who really invests in bonds at all. But then I come from a background where interest rates are a lot lower in developed markets and not nearly as attractive long-term as stocks. I can understand the attraction in this region, especially now in Kenya. I think you can get 17% on short-dated bonds. So, in that situation, a lot of people are saying, well, why bother about stocks? And if you're short-term thinking and you're investing in short-term bonds, that does make a lot of sense. And obviously that crowds out potential investment from the stock market if everyone is using their capital to buy bonds. But if you think longer term, then I think you really do need to think seriously about equities, because if you look at the long-term history of currencies and inflation rates and so on in African frontier markets, it's not a pretty picture. The Kenyan shilling has gone from 80 to 150 over the last couple of decades. And if you're holding a 20-year bond, you're going to get paid back in that depreciated currency in 20 years' time. That's the big fear I have with bonds. Bonds are fine short term in high interest rate environments. But you have to factor in the long-term inflation and depreciation of currencies that you're getting paid back in much less valuable currency. So that's why I tend to have a bias towards equities. With equities, companies can increase their prices over time. You buy a stock and you're not locking in a coupon and then a repayment of something in 20 years' time. There's obviously risk that it can fall in short-term horizons. But generally, if you buy high-quality businesses, their stock prices will go up in the long run, and they have pricing power, their dividends will grow, and that's why I prefer equities. Probably some balance between the two is what makes sense for most people, rather than going all in on bonds. Probably makes sense to have some stocks in your portfolio.
Great. Mr. Porteous.
Okay. Thank you, Tim, for the insight you have given. Now you have spoken about the long term or the investment horizon. Now my question to you is, what is the long term in your perspective when we are investing in the frontier market? Is it we have a certain calendar years, or you are just invested in the frontier market until it graduates maybe to emerging market or developing market? What is your typical horizon?
So every person's individual horizon is going to vary depending on what stage of life they're in, how old they are, and so on. But when I say long term, I'm thinking at least 5 years and more like 15 years, like a whole generation, really. And the short-term trends are quite volatile. But if you look at the longer-term trends in Africa frontier markets, you have a lot of tailwinds that should help businesses grow over time in terms of the demographics. There are more and more working people, productive people, and fewer people dependent on them. Populations are going to keep growing, but the segment of the population that's going to be growing fastest is not young children. It's people in working age years. So if I look at a forecast going out to 2050, what's that? That's 27 years away. To me, that's long term. I have a couple of young kids. I'm kind of investing, thinking about what the world is going to look like when they finish university and enter the workforce. I'm not thinking about what the world's going to look like in 5 years' time for me personally. So that's what I mean about having a long-term horizon. The demand for basic goods and services throughout frontier Africa is going to keep going up. Cement, everyone needs shelter. Financial services, people need to be able to transact. Mobile phone services, all of these things, food, drinks, all the basic stuff. There's no way that demand is going to shrink. It's going to keep growing, obviously at different rates. So my investment thesis or strategy is to be part of that trend and put that wind at my back. So that's why I own companies like Twiga Cement and NMB and Safaricom in Kenya. And, the businesses are just going to keep growing. It's what Warren Buffett says. If you can see that a business is going to be much bigger in 20 years' time and it's obvious, then that's usually a good place to start looking. So that's what attracts me to the long term. I mean, is everything going to be perfect and rosy? Of course not. There are challenges always. Frontier markets do change very quickly short term. Foreign exchange shortages, high fuel prices, inflation, bad weather, anything can happen. But you have to sort of keep your eye on the long-term horizon and when I do that, then I remain quite upbeat, and I think that growth is inevitable. So that's what I mean by long term. Thinking in terms of a whole generation. And I saw countries in Asia when I was living there get rich inside one generation. South Korea, for example, which is quite incredible. I mean, I don't think we're going to see that repeated in Africa, but within 2-3 generations, I think that things will go in that direction. And that's my long-term thesis.
Okay, thank you. And you have answered my next question, which was I wanted to ask you about the perceived risks, especially market volatility and the frontier market. Because as long as you are focused on the longer term, you are ready to live with short-term market volatility. Because what I wanted to ask you is about,
Yes. Yeah.
Sorry, go on.
As an equity investor, you do have to be able to stomach a lot of short-term risks and ups and downs, and these things obviously will hit you from time to time. But if you look at the current situation, I mean, I think the main problem at the moment is a shortage of foreign exchange, or in particular US dollars, throughout all frontier markets and even emerging markets. And that's simply a function of the fact that the US has hiked interest rates at the fastest pace ever. You can now get 5.5% on a T-bill in the US. People say that's risk-free. I'm not so sure. You still have interest rate risk. You still have inflation rate risk. You still have U.S. government risk. But if you can get that much money on simple U.S. dollar cash investments, then obviously a lot of people are going to do that. So a lot of dollars have been sucked out of the rest of the world and gone to be invested in the U.S. But again, this cycle will turn. Interest rates don't go up and then stop. If the U.S. economy slows, they will begin to cut them, and then we'll be on the other side of that trend. So it's never in your control, and you need to be able to roll with those risks. But if you have a long-term view, then equity investing can be very, very lucrative.
Okay, thank you very much. Yeah, sometimes in one of your past materials, you spoke about frontier markets, especially Africa, being uncorrelated with the rest of the world. Is that a good thing, or what is the effect of this uncorrelation?
Yes, so my clients, my investors are not Africans. They're not local people. They are people in Europe or Asia or the US who have broadly diversified investment portfolios, and what I'm providing to them is an opportunity for them to invest in frontier Africa, which is not an easy thing for them to find, but they benefit from the fact that a lot of the markets that I have invested in here are counter-cyclical with their own markets. So, for example, in 2022, most equity markets around the world had a horrible year, and everyone lost money on their stocks. This year, it's bonds that are having a horrible year. The US long bond is down almost 50% from its highs. But last year, my clients made money in my fund, which helped to offset their losses that they had in their home developed market equity portfolios. So that's what I mean by being, uncorrelated or counter-cyclical. Now, that's partly because I happen to choose the right countries to be in. The Tanzanian market did very well last year. I've also had a good investment in Senegal. I had some decent investments in Rwanda. Kenya, Nigeria, Ghana, they also went down, like the developed markets. But luckily, I didn't have too much money in those places, and the gains that we had elsewhere offset that. So the fund that I managed was up in 2022, and obviously my clients benefited from that. And I think that's that's not something that necessarily applies to local investors here. But that's something that's of benefit to my investors because they're global.
Okay, thank you very much for that response. Ami?
As I was listening, I noticed that you mentioned that you have holdings in Twiga Cement and NMB, and it's just that last week we had quarter three results from both CRDB and then NMB. I just wanted
Yes.
to know your opinion on the banking industry at large here in Tanzania, maybe for the past year and for this year. What do you see and what do you expect and what are your expectations on the banking industry? We have seen CRDB going to DRC, and there they have a strong holding, of course, in Burundi, but we are seeing NMB is still highly focused in the Tanzanian market. What's your comment on that?
So obviously the banks have been doing very well. I think that's quite well known now in the country. The newspapers have had front page stories about how well the banks are doing in earlier this week, for example. And NMB in particular has done spectacularly well. CRDB also is growing very quickly and has done well. But there's still a lot of room for expansion in Tanzania. You know, it's still an underdeveloped financial market. So I think that the banks do have a long runway of growth still ahead of them here at home in Tanzania. Obviously, there will be cyclical ups and downs, but the long-term trend is still for strong growth, double-digit growth over the next 10, 20 years, I think is quite possible. But you can't grow at 30% every year. And that's what has been the case in the last couple of years. Even CRDB's loan growth for the first 9 months of the year, I think is 30%, which is, it's too fast. You know, when you grow that fast, I wonder if they're missing some things in their due diligence and so on. So I do expect things to slow a little bit over the coming years, but I expect that the trend will continue to be up, and hopefully the banks have been prudent and, you know, they don't get in a situation where they have very high bad loans, which is the thing that's troubling the Kenyan banks. But that's part of banking. You're always going to have bad loans. It's just a question of how much. So I think, you know, the growth will continue in the next couple of years, but then there will be a setback at some point. Cycles, you know, come and go. But if you look through that, then, as I say, the level of penetration of financial services is still low. There are a lot of people that even don't have bank accounts. There are people that have bank accounts but don't really use many products. So if you take a long-term view, again, I'm very positive on the banking sector. Whether banks should be expanding into neighboring countries, well, you know, that's for their boards to decide. But if it were me, I would be trying to do as much business at home first before I go into an unfamiliar market. And you see the Kenyan banks obviously are expanding throughout the region. You know, there are formidable competitors once you leave your home market. So I think the banks here are in a fortunate position that they still have a lot of growth ahead of them. It's a market that they know. Why not stick to that? That would be my tactic if I were in their shoes. But as I say, that's for them to decide.
Maybe, I mean, if I can add on the banking sector, with the I know you are following up on the treasury yields in the government securities market, and there is this trend of rising treasury yields. How do you see this affecting the bank, especially on the net interest margin and funding cost?
Sorry, are you asking me or you're asking Ami?
I'm asking you if you have heard the question, if you can respond.
Okay. Yes, I think it is a concern that, as you say, bonds seem to have turned the corner and be falling in price with yields going up. And that's one of the problems also that the Kenyan banks, which I do also follow quite closely, obviously they have mark-to-market losses on their bond portfolios, and it's become a problem. But if you hold these things to maturity, then you do get paid out, and the effects on your financial statements are only temporary, right? So I don't have a great fear of anything like that in Tanzania, in fact, affecting the banking system badly. It's not like the US, where some of these regional banks' bond portfolios essentially wiped out the entire capital of the banks. The banks here are well regulated and, for the most part, well capitalized. They learned from past episodes where things did not go well in the mid 2015, 2016. Obviously, there was a shock in the banking system. So I think that they're in a good position to weather the storm, is what I would say. The thing I do find a little bit concerning is that their margins are so incredibly high that I sort of scratch my head as to why net interest margins have not shrunk more than they have. Really, if customers at banks were a little bit more savvy, they would take their money out of all these low-yielding deposits and put them somewhere else. So I think that's a potential disruptive factor. The banks are going to have to pay more to their savers than they are now, and margins will shrink because of that. When you're making a 10, 12% net interest margin, it's really incredible, and you don't see that in many countries. So that would be more my concern, that the funding costs are rising for them as a result of these movements in interest rates.
Maybe you have mentioned about this large net interest margin. Can we attribute it to maybe information asymmetry, that savers do not have access to other money market instruments or money market funds where they can get high yield?
Yeah, I think so. I think that the financial services industry outside of the banks could do the population a great service by setting up products that offer alternatives. As you say, money market funds, they're not that common here in Tanzania. In Kenya, you can easily find money market funds, and that would take advantage of the high coupon rates on government bonds and package them up and allow the small savers to participate. It's difficult now as a small saver to participate in the bond market. The minimum purchases are quite large. Although the banks themselves have also helped to foster this environment by issuing these 3-year bonds, both CRDB and NMB and NBC, they've all been out with bond issues. I think most of them are 3-year tenors, which, if it were me, I would be looking more for the short-term stuff. Money market funds being a very good alternative to basic savings deposits. So I think the market will move in that direction, I would imagine.
Okay, thank you very much. Ami, you have the mic.
Okay. All right. I just wanted also to know your insights on the manufacturing sector, because I think beyond banking, manufacturing has been a pillar here at Dar es Salaam Stock Exchange. You have the likes of Tanzania Breweries, TCC, Twiga, and so on. Of course, we know TBL and TCC, their price has been is just up there, stuck there due to several reasons. But we also have the likes of Twiga, TCC, Tanga now. What are your opinions? Because these are companies which are part of Tanga Cement. We are seeing that they are actually stable dividend paying stocks. For instance, TCC, I think the payout ratio is around 96%, which definitely shows that their main target for now is just just paying back to its shareholders. We have the likes of TBL, which pays, I think, a dividend twice a year, and now TCC. With I think it's a leading company in terms of the cement industry, but we're also seeing Tanga getting into the picture with this particular acquisition. What are your opinions on the manufacturing sector? Should we give up on it, or there are still prospects in that particular area?
In terms of the listed manufacturing companies, as you point out, they're different in character. The cement industry seems to be still expanding. Twiga obviously has been doing what it can with its one factory here. They've improved the productivity of it, but Tanga, the Heidelberg Group's takeover there and commitment to invest more and to build a new kiln, I think that's all positive. You're seeing growth. In terms of the other manufacturing companies, TCC is not expanding here in Tanzania, as far as I'm aware, and probably don't have plans to do so. But they're still seeing reasonable growth in the domestic market just because of the demographics. But they're also seeing quite healthy growth from exports. So when they will hit capacity, 100% capacity utilization, I'm not sure. It's not one that I follow all that closely. They're also quite tight with their information flow, to be honest. But TBL is also expanding. I mean, they have 4 breweries around the country, as we all know. And by the way, these are very good quality high-tech breweries in an African context. I think 3 of the 4 Moshi in order to be able to do import replacement, to be able to use locally sourced barley and make malt from that themselves, rather than importing malted barley from Europe, which is the case now. And that should help not only their profit margins, but also the whole country save on foreign exchange. And it also will mean that there are a lot of local agricultural producers that will get business from that. So as I understand it, they're working with local farmers to grow more barley. And then once they have this malting plant up and running, then they want to source most of their malt or barley locally. So they are expanding as well, which is positive. And again, the demand growth for their products, as far as I can see, is guaranteed, barring any totally unforeseen developments. Because every year you have more adult people in the population. They're the ones that consume TBL's products. So the market segment is growing all the time. So yeah, I mean, I'm still fairly bullish on the manufacturers, and it would be nice if liquidity came back into these 2 stocks that you mentioned that are stuck, TCC and TBL. But that's not something that we can control. Twiga and Tanga, again, I'm not sure exactly what direction Tanga goes in as a listed company, but I'm bullish on its prospects now that Heidelberg are in there and going to be running it relative to what's happened over the last 5 or 6 years. It's positive as well.
Great. Mr. Fortius, any comments on the manufacturing side?
I'm just thankful for what Mr. Tim has just shared with us. Being bullish is a positive sentiment. And I think for our investors here, especially retail investors, it's better they take heed of wonderful advice we get from Mr. Tim and then take action. Maybe what I can ask you, Mr. Tim, I'm sure being on the ground, you are learning a lot about the frontier market and even assessment of risk. Maybe can you advise us? Maybe we invite the other fund managers outside to set offices in Africa so that they can be on the ground and they understand our risk. Maybe they can contribute more or have a better contribution to our market as you are doing.
Yeah, it's a bit strange to me, to be honest, as you described that. I think I'm the only Africa Frontier fund manager who has a foreign clientele who is actually full-time present in Frontier Africa. Right? Most of these funds, they seem to be run from the US or Europe or the UK or South Africa. Okay, so there are quite a number of large funds run out of South Africa, and that's obviously quite close to being in Frontier Africa, but it's still not quite Frontier Africa. So it would be nice, as you say, if more of these funds had people on the ground that could interact more with local investors and share ideas and impart knowledge and so on. But I haven't seen any trend in that direction. I'll be sure to ask some of the guys that I will meet on the upcoming Nigeria trip, why don't you move to one of these countries and actually have boots on the ground? And let's see what they say.
It will be wonderful. It will be wonderful. Now maybe if I can ask you, it's a sort of feedback. What challenges or any setback we have faced in the frontier market and how you address them?
Obviously, the most difficult thing for me is the fact that my fund is a dollar-based fund and my investors, not all of them, I mean, some of them are resident in Europe or Asia and so on, but they think in US dollars, and with the currencies being continuously weakening, it creates an extra barrier for me to report good performance. I have to do even better in local currency terms than in US dollars. So that's one thing. And then, it's also a little bit frustrating, to be honest, the transactions costs that apply in most of these markets. You not only pay high levels of brokerage commission and custodial fees, but on top of that, there's all sorts of other fees on top, fidelity fees and DSE fees and this and that. And then to add insult to injury, the government then levies 18% VAT on top of it all. So that's one thing that has been a challenge and a headache for me, for sure, compared to investing in emerging markets or developed markets. In other parts of the world, financial services don't attract VAT, for example. And just on a personal level, whenever I take money out of the ATM, I see all these fees and charges and taxes and levies, and it's painful. So that's another thing that would help, I think, to develop the markets here, is if transactions costs were able to come down. And then, of course, the strange trading rules that apply, not only here at the DSE, but also in places like Nigeria. I think I've discussed this before, and I've certainly written about it. In Nigeria, a share price can't move unless 100,000 shares trade in a session. So if you have a high-value stock like, I don't know, Airtel or MTN or Nestle Nigeria, which is one that I own in the African Lions Fund, where one share is $1 US. So $100,000 of turnover has to happen before the price moves. Those kinds of arbitrary rules, I think they're also detrimental to the development of these frontier markets. But hopefully in time this changes.
Okay, thank you. Now maybe this question is to Tanzania. I know our market is still very small. It is not representing the main pillars of our economy. Which sectors do you think we as transaction advisors should focus to bring those companies onto the exchange?
That's a good question. There are a number of listed companies that operate in Tanzania but are listed elsewhere in the mining sector, for example. So if I look at the economy here and I want to get exposure to mining, that I can do by investing in Australia or Canada or even the New York Stock Exchange. The Kabanga Nickel holding company is now listed there. So while it might be nice for local investors to be able to get exposure to some of the mining companies that operate here, for foreign investors, it's not such a problem. You can find exposure to that. But the other one that's obviously missing is agriculture. I don't know that there's any easy solution to that. I mean, it's up to the companies that run these businesses whether they want to list. But that's a gap for sure. You read a lot of information about agriculture, and it's the sector that employs by far the most people here in the economy. But can you actually get exposure to it? Not really. I mean, there's a limited amount of exposure with some of these banks and the bonds that the banks have issued. But there's no no cashew nut company or coffee company or something like that. In Kenya, you have tea companies and avocado companies. So that's one that I might look at if I were in your shoes.
Okay, thank you very much. Me and Dami, I think we have listened to Tim, and we know where to go for the next candidate for listing. Ami, now the mic is yours.
This is great. Mr. Tim, we have recently seen banks issuing sustainable products in terms of corporate bonds. So when it comes to ESG, especially in these developing markets, what's your opinion on that?
I think ESG is sort of a bit of an overrated buzzword. The way I view it is that any good business that's run well by ethical and competent people should be doing all of these things that ESG promotes. I mean, it's just common sense. Whether you have to especially highlight the fact that you're doing something that's ESG related, I'm not sure. A good business should be responsible in all of its interactions with people and the environment and so on. But it's positive that companies here do focus on that. I see TBL do a lot of ESG related stuff, and it's good that the banks are also promoting that. But I think ESG kind of went too far in developed markets. People would set up ESG funds just for the sake of it, where, as I say, my opinion is that every good, responsible corporate citizen should be doing those things anyway.
Great. I think we are reaching the final minutes of our session, and maybe I should let me bring you in, Mr. Tim, for any final remarks on your end towards our market, maybe.
Look, as I said, I remain quite bullish. There are certainly always going to be short-term challenges in frontier markets, and Tanzania is no exception. But when I look at the businesses listed here and the ones that we own shares in, the ones that your listeners are able to buy, I see no reason to be negative or overly concerned, and I think the long-term direction looks very positive, and I encourage people to consider equity investments for their own savings, and it's a good thing to do.
Great. Mr. Fortes, final remarks?
For me, I would like to express my thanks to Mr. Tim for the insight and the ideas he has just shared. And I'm happy that he's bullish to our market. So I will urge our listeners, our potential investors, our current investors to add to their portfolios. We are still having a wonderful future. And apart from that, I will urge those who can listen to this recording so that they can understand, or they can take action based on the ideas Tim has just shared. Otherwise, thank you very much, Tim, and thank you, listeners, for participating in this session.
Thank you very much for inviting me on. It's nice to interact with investors from time to time like this on this platform.
Thank you.
Great,
Have a great day.
All right, Tim. Thanks a lot. We extend our gratitude to on your presence in our platform, and we hope that in the near future, maybe early 2024, we can have you on as we look at the market outlook moving forward.
Yes, sure, no problem.
All right, great. On our end, to our investors, thank you a lot for being with us here. I know our market has been quite interesting towards the end of this particular year, because we have seen this news from Tanga Cement, but we are also seeing we have been always expecting that particular trend where stocks kinda fall due towards autumn, but we're not seeing that trend really this year. So I know most of you are quite skeptical, like when are we gonna get in? Everyone is waiting for CRDB to go down a little bit so that they can have it. They could have an option to get in once again, and NMB as well. What you can say is that information is power, and here at Orbit Securities, that is what we provide. We provide daily reports, weekly reports, monthly reports, but also analyst notes. So kindly reach to our social media platforms so that you can engage with us in terms of getting information on what's happening in the market, but also in case of any advice, just you can reach to us through WhatsApp, through LinkedIn, through Instagram, but also you can have a company visit. You can just visit in our offices, and advice is not charged per se, so just feel free. Na niwatakie siku njema. Najua siku ya leo mvua ni nyingi sana huko mtaani, but hopefully everything is good on your end. Now, on our side, we are here for some time now, because we are initially having sessions in Clubhouse, but as you all know, Clubhouse is having troubles now being accessed here in Tanzania. So we will be here in Twitter Space or X Space. So kindly also follow our page, but also let other people know that we are in this particular space. Until further notice, we will meet again on Thursday. Again, thanks, Tim. Thanks, Mr. Fortius, and thanks to our dear listeners.
Asante sana.